Hey traders, welcome to a global macro update. We will touch on BTC in this video, but we primarily want to focus on the S&P 500 along with the US dollar, and more specifically DXY is the ticker that we'll be looking at to measure the strength of the dollar. So first things first, we're going to be looking at the S&P 500. We're actually going to take it back to the weekly chart, but there's going to be a specific type of market structure that we want to be focusing on because this could potentially be the next move that we're going to be seeing here. So on the weekly chart, what did we see? Kind of on the large time frame, let's just take a picture here. We saw a series of higher highs, like so. This is a high, kind of had a resistance right there, but then we saw a break, retest, kind of around there, a little sloppy, but we did see an impulsive push to the upside, and this was like 2 months worth of price action, so we don't want to miss out on those opportunities, or a third almost, I believe, of a year. So a significant amount of time. So what we saw was a squeeze where we saw the series of higher highs. It wasn't very significant, but then we saw the squeeze where we saw a low, a higher low, and a higher low. This creates an ascending wedge, which a lot of people only really assume to be a bearish market structure and price action pattern, but in fact, you can actually have a break and retest to the upside like we saw right here. So looking at the large time frame, what we see is something similar. Let's just erase all this. We see a series of higher highs, right? This is a high, this is a higher high, and we see a higher high, and we see a higher high right here. What we've seen recently is kind of since the summer of 2020 is a series of higher lows as well. So what we see right here is this previous level of resistance turning into a new level of support, and then we're trading right at this zone, kind of right below this ascending level of resistance and above this horizontal level of support. So what we see ourselves in right now is a very nice tight consolidation where we are below the resistance zone, but we're still above a pretty major level of support. So we're just trading in here, we're consolidating. This is going to be a contraction in the volatility, and then ideally what we're going to be seeing is, if the US dollar is going to fall, so that's the US dollar, we're going to see a potential move like so. What we saw right here is a break, retest, and a continuation of the bulls charging into the market. So that's going to create a extremely risk-on environment. I think BTC and other alts are going to be doing amazing during that time. Right now, we're seeing a slight correction, consolidation, contraction in the market cap of a lot of alts. That's totally okay. We've seen a lot of alts absolutely explode, XRP being one of the more notable ones. So we're going to go from the weekly, we're going to now drop to the daily time frame to get a better understanding here. And not only do we see the two trend lines that we've been able to identify, this ascending zone also is this horizontal zone right here. Also, we do see this potential symmetrical triangle breakout. Let's just take a picture of the price action. On the daily charts here, we see a high, a lower high, and a lower high right here with a candle closure. Big wick to the downside indicating buy pressure, bringing it right back up. Decent amount of sell pressure with that ascending level of resistance right here indicated by this big wick. So right now we're just in a point of uncertainty where we got a resistance and we got that horizontal level of support, and we also see this previous resistance turning into a new level of support as well. So lots of buy pressure below it, and there is still sell pressure here. So it's good to see that contraction, and then once we see that breakout, ideally like this, that's going to be the point to possibly look for some risk on action. So we're going to now go to the US dollar because, actually, let's go to one smaller time frame to get a really good understanding. We're going to jump to the 4-hour chart. And what we do see is a further squeeze. Definitely makes sense to actually come here. Is an ascending zone right here. So now we see a lot of zones, both major and minor, but overall, we're getting a contraction in the volatility, and after a long contraction comes a nice expansionary period where there's going to be a lot of volatility, a lot of movement, and we're going to try to capture that either to the upside or to the downside. I think the bias is going to be the upside, but we always want to wait for confirmation before taking action. So let's just take a picture of the 4-hour chart here. Finalize the S&P 500. We do see a high Slightly lower high. I would really view this as a zone of resistance right here because this zone is in confluence. It's just going to be lots of supply right there. So it is validating the zone and respecting it quite well. That's really great to see. So we can easily put a resistance level there. And then we see this previous resistance like so, turning into new level of support. But these lows are actually getting higher and higher in price. So we're creating these higher lows, which is great to see for the bull case that we are anticipating. So that is how I drew this ascending zone. So what we're currently seeing right now is an ascending triangle within an ascending wedge structure, where this is the consolidation contraction period before the expansionary phase that we're looking to enter in for overall risk on behavior in the global macro space, not just in the S&P, but if you're looking at other assets that are considered risk on, things that are invested in when people are hopeful, when people are optimistic, when they feel good, that sort of asset, I'm sure you are well aware. So overall, that's what we're looking for, is a potential ascending zone or ascending triangle or symmetrical triangle. I kind of view it as an ascending triangle break to the upside. That would be the ideal situation for us to look to enter in. And then you could use a stop entry. You could use whatever structure that you're looking to enter in. I'm not going to get into the specifics of that. That would be in the Performante Premium. We talk about different entry options and different situations that you could look to enter in to get the highest level of confirmation. You know, we got to look at different time frames. We got to look at candle closures on different time frames and really do our multi-time frame analysis. So, going to get a little bit of water and then now switch to the US dollar. Quick look at the volatility before we switch to the US dollar, just because I saw it on the way out. We're nearing a pretty strong level of support, right? So if we break it, we're going to see a different market structure. We're going to see a breakdown. And yes, we can draw that, but that move, we're looking for something like this. Let me just get my bars pattern. Ideally, what we're looking for is a nice slow fall, sort of like that. That would be ideal. A nice because when the price is going up, you're not seeing the volatility spike. These spikes are coming from big sell-offs, right? So when we're longing or looking for risk-on exposure, we want the VIX to be very, very steady, very mellow, very chill. We don't want it being a very aggressive push where there's going to be a lot of people looking at this asset, because obviously it can go up pretty exponentially, but talk for another day. So next asset, like we talked about, is going to be DXY. So let's actually keep the S&P right there. And then we'll be looking at the US dollar. So overall, when we're looking at, let's say, the 2-day weekly, it's in a bearish push. Actually, let's go to the weekly to get a really good understanding of where we are within the overall market. Top-down analysis, I look at these charts every day, so it's easy for me to know where they are on the overall scale, but it's good to educate people on kind of where we currently are. So in short, we're nearing an extremely major level. If I bring this across, let's try to get it right here. Oops, that's not the correct one. We're going to see a lot of buy pressure all along this zone. 2015, 2016, 2017, we saw a push back up, and then we're nearing this zone right now. So if we pass this level, I think we're going to be plummeting down to around 88. Massive drop for the dollar overall since that massive symmetrical triangle breakdown that occurred at spring of 2020. So what we saw last time is a lot of hesitation to go below this zone. What we're seeing right now is very similar, but once you see that break, it's basically like throwing a brick out of your 12-story apartment window and seeing it fall all the way to the ground floor. I think that's just how fast it's going to be dropping if we get the overall structure that we're looking to see break. Right now, we're in a potential double bottom or breakdown structure, and we're going to be looking at that right now. But on the weekly, overall, we're not going to be assuming what's going to be happening in 2023. I don't really care for that. I just want to know what's happening within the next couple weeks, months. I'm a swing trader. I don't trade a minute time frame. I don't really trade the weekly time frame. I look at the candles, I look at the chart, but overall, I like to hold for between 2-5-ish days would be ideal. So now let's go to the daily chart and have a good understanding of what we're looking at right now. So let's take a picture of it. Let's just make it a little bit right there. So we saw these structures. This was that symmetrical triangle I was talking about, breakdown to the downside, continuation pattern with an ascending wedge, another breakdown, and then we saw another wedge right here that broke down, retested once, and then came back, and then we had this zone, didn't really have that zone. Kind of awkward in terms of how many times it pulled back, to be completely honest, from this continuation pattern, but it did end up working out with the series of lower lows that we're getting right now. So ideally what we would have wanted was to see this zone hold. It didn't momentarily, but on a daily, we'd ideally like to see that candle closure right at that level. So not perfect, but what we saw after that was a move to the downside, and then we tested this low, broke it, so we saw a lower low, and then we saw a lower low from there. So we connected the lower lows, we get a nice descending support zone right around there. And we can also see it was a previous level of resistance. So overall, well-respected zone for the level of support. And then we see this zone not perfectly well-respected, but we do see our first zone, second zone, and third zone for 3 validations for our resistance. So what we currently see right now is a descending wedge formation, which could melt to the downside if the S&P is going to be moving to the upside. So overall, that's going to be the negative correlation that we're going to be looking for. If the bull case does come through and this support zone holds, we could see a double bottom formation, something like that. I don't think that's going to be the case, to be completely honest, but we always want to have different scenarios play out kind of in our minds when we're making videos. So then if XYZ happens, we have a plan, we're prepared, we have patterns that we can depend on, that we can use to basically recreate a similar trade over and over and over and over again in order to basically have the percentages in your favor. If you have the exact stats of what you're trading in terms of setups, you have more confidence, in short. So it definitely helps out. So what we're going to be looking for is to see if this holds. We're going to be looking for this descending level of support. If that's going to be breaking, that's going to be an indication that we could see a pretty big meltdown. We're going to be looking for risk on assets, right? And then if we see the market structure shift maybe right around here, we see a nice support resistance and support resistance. So overall right there. So if we see it start to consolidate and then kind of jump up, that's going to be a zone where market structure shifts. So if we see kind of the price action trade in this area, that's going to be a point where you might want to change your bias. You might be a little bit hesitant to look for risk on assets, just because if you're trading in this zone, you've broken this trend line right here, which is 3 zones, 1, 2, 3, valid level right here, along with this level of resistance that was well respected throughout basically all of this summer and beyond of 2020. So I think if it goes beyond 94, we should be looking for we should be looking a little bit less in more speculative assets, but as long as it's trading kind of even within here, I think we could just have a little pop and then a meltdown again. The bias is definitely more to the upside because the market structure does not look very bullish in this overall asset. So that's going to be my view for the S&P and the US dollar. We can put it a little bit lower, maybe somewhere like so. So then what we're going to be looking for is ideally something like this, where we're going to get a failure to hold that level of support, and then maybe you get a little retest. But overall, we're seeing a nice funnel within this zone and in this zone. And usually funnels and contractions and volatility lead to expansions. If the price holds this zone and starts kind of going like this, well, then this is going to be that mid-level zone that we want to look at. Even if it goes like this, we don't want to assume that it's just going to hold that zone. We want to really validate it by looking and making sure the market structure changes, it shifts. So that's going to be what we're going to be looking at for the DXY. All right, so the last topic of the video, we're going to be looking at BTC. A lot of people have been a little bit worried that we're getting a pullback, but look how freaking big this bull run has been in terms of breaking the 10K zone. Can't really say it's a complete bull run, but look how strong this first impulse push has been. That would be the more correct way to talk about this kind of 2020 situation that we're seeing here. So on the weekly chart, we've been talking about it since really we made this zone, so we saw a slightly early break, I think, than most, but in terms like right around here is when we initially called it, and then once it pulled back and retested this zone, we were like 10K zone, man, this is it. So if you have no exposure in BTC, do not know what you're doing, to be completely honest, but at the end of the day, I think this is a really good opportunity for a potential pullback to get a nice contraction, and then we're going to be looking for that next big move. So I think actually what a good option is, we don't really have the information there. I think what we're going to be doing is perfect. We have BLX right here. So this is that previous all-time high, around $1,000. What we saw to the run-up of it is, yes, significant pullbacks, easy for BTC to pull back 20%, 25%. But at the end of the day, we're looking at the market structure on the weekly, at least daily time frame for the overall bias for if you're going to go long or short. So at the end of the day, we're looking at this move here. We'll go to the daily. But what we're going to be looking for is to see if any of these break market structure, right? So what is market structure? Well, this would be an area of resistance, right? Just very, very simple TA, very brief overview, and I would say this would be the market structure right here, right? You see a squeeze that occurs, which broke to the downside. That was a squeeze, not a perfect resistance. That would be a better resistance, and then we saw this zone right there. So we did break to the downside, but in terms of market structure, you could say that is your first level. But in terms of overall bias, I would put it here, right? Definitely, I would put it here because it doesn't make, this is your major impulsive push, and then you get your consolidation. Just like so, not absolutely perfect. Ideally, you would have potentially a third high right here. And then you got your zone right here. So what we're currently seeing is an impulsive push. This is a continuation pattern or a contraction, and then your second impulsive push. So these are the times that you want to be looking for possible entries, right? And yes, as an investment, you're holding, but in terms of impulse pushes, they will come and they will be very aggressive. But you have to assume that there's going to be some level of correction. And these corrections are great because it allows you to enter on usually leverage at a better point. So after the breakout, you're getting this next impulsive wave. This is why TA is so useful, not just looking at fundamentals. It gives you timing, which fundamentals really cannot. All right, so what we're seeing right now is our first impulsive push after breaking our major zone. Looking on the major time frames. So this was that major zone 10K retest. We got a squeeze right here. And then boom, off we go. Like we said before, we're going to have some consolidation, some contraction, where we're going to be looking at a possible squeeze ideally. And what better place than, let's say, previous high. I'm just looking at the most recent price action as well. So on the weekly, this is the zone that we want to capture right here because we see candle closures right there. Very, very important. And then we go to the daily. Less ideal in some cases, but we see instant rejection right down, and then once we break it, we see it hold, and then we see a resistance twice with candle closure on the way to the downside, and then a type A with the top candle right there. So overall, it looks pretty solid in terms of a zone. So what we're going to be looking for within this level is something similar to this. Ideally, we're looking for a series of lower highs holding in horizontal level of support, which is going to be around $16,000. And we want to see that lower high connect really well with a descending trend line. Once we see a break, we're looking for a series of steps to occur before we enter to give us the highest level of confirmation. So now that we understand large time frames, we can now go to the 4 hour. And we can see this zone right around here is from, let's say, 16.2 to 16.5-ish. So I don't view them as an exact price point. They're areas on a chart. So this is going to be a demand area. So what we're going to be looking for is for this area to hold. Now there are situations where you could get something like this, where you see a descending wedge squeeze the price just below the support, and then you think it's a retest, and then it makes a massive move to the upside. And this is where a lot of short sellers get absolutely wrecked, because they see it break this key level of support, they enter, and then they get absolutely wrecked from the overall bulls not hesitating to bring it right back up above the key level of resistance. So we will be looking out for that. That's why it's really good to look at the large time frames, the weekly chart, even not really the monthly, because crypto, I don't really use the monthly, and some people might, but monthly, daily, 12-hour, 2-day, all those charts, looking at large time frames is very, very useful in my opinion. So that's what we're going to be focusing on, is making sure that this level of support holds. If it doesn't, we have to change our overall approach to the market. We have the same strategy, but we will potentially be looking at this zone as a level of support, and then if that holds, when it get a bounce, I don't think it's going to be just bouncing absolutely to the moon right yet. I think we'll have some consolidation, some breakdown, where there's going to be a point where all the novice traders who just got in because of this are thinking it's just going to go straight to 100K because their friend, relative told them that they think it's going to go to 100K, and waiting until January is just the worst thing in the world for them. So we're going to be patient. That's the overall approach to it. We're letting the price action kind of tell us what to do. We had a massive push to the upside. I think 16.2, 16.3 is a good overall level for demand. And we also see a series of higher lows approaching that level. So we're not really going to draw an ascending zone there yet, but ideally we want to see some lower highs. That would be really, really nice to see. And then we connect them right here. We could either get a descending zone, descending triangle, we can get a descending wedge, we can get a descending channel even. That would be a bull flag, but at the end of the day, we're looking for some level of contraction, and then we want to see that nice break and retest of the zone of confluence, either from the bulls or bears. In this case, obviously, it is the resistance turning into a level of support. So that's the overall approach to BTC. Thank you very much for watching. Kind of a quick video. Talked quite a bit in terms of the 3 different assets. If you found this kind of more educational video going over the more simple stuff more useful, definitely drop in the comment, say you like it. If you thought it was too elementary and you just wanted me to go directly into the price action, comment as well. We always like to take constructive criticism, because that's the only way to get better, is to learn from mistakes and things that could be improved. So thank you very much for watching. Really appreciate it. Hope you had a good trading week, and hopefully have a good Friday for tomorrow. Until next time, have a good one, traders.